Hey everyone, good morning. It's JJ again. And go on our part two of how to use what I learned in market profile to help us initiate a short, initiate a long. This is for larger time frame traders. The concepts are still valid on shorter time frames. I'm going to go from large to small, so we're just looking at daily profiles here. Now, what I've got here, you see all these crazy lines. Back in 2020, back in April 2020, I came up with what they call a balance level. Now, a balance level or a balance area is a consolidation area for you non-market profile traders. It's a bracket or a balance area where basically you get a low and a high. You look above that high, you come back to that low. That's balance. Freakishly simple, but insanely accurate. Now you take that balance and you double it and double it and double it. My original balance level back in the day was back at the 2749 area to 2810. It shows you how long ago that was. And those levels worked all the way up to 4800, and they're continuing to work now 3 years later. So basically, what we do is we get these zones and then we cut them in half and half and half. And each of these zones now is about 60 points. So here you have a situation where the market breaks lower, into a zone, right? Because we have inventory that's trapped overhead. When markets go up and go sideways, this is distribution. Then the large traders just sell the market back down to their cost basis, right? Think about when a store puts something on sale. It's the same thing. That's why we call it the stock market, the futures market. That's why we don't call it the stock hot tub, because it's a market, okay? So look at 40.15 and a half, right? This market is very interesting because it looked above 40.15 and a half and then came back underneath it. We call this a look above and fail. It looks above 40.15 but can't get to the middle at 40.46, can't get to the middle at 76, so down it comes. So when it comes underneath 40.15, those who short in this area here, right, the timing, of course, is not easy, right? Now, this is a large trade because it's a large range. So when the market looks above and fails, you short the fail, right? You might not get the top. Maybe you short 4,008, and your stops are up in 50. These are 7.5 points. So you're going to have a decent size account and some sophistication to be able to do this. A little bit of skill, right? But that'll come. So say you're short 4,008. You're looking for the market to come to the middle of that zone. If it breaks the middle, you're looking for the bottom. So a look above and fail of 40.15 targets 39.55. So when the market breaks 39.55 and comes back up it the next day, hey, if it looks below and fails to get down to 39.24, aha, you've run out of sellers. So the market's going to rotate back up to look for them, right? So say you missed the short, you want to log, you look below 39.55. When it comes back up over it, say you initiate 39.63, you're looking for 39.85, then you're looking for 40.15, okay? Now, I'll show you how I wrote this up here, right? So using these market profile zones, we can avoid getting trapped in longer time frame positions at bad trade location. For example, if the price looks below a level and comes back up over it, the market will target the middle than the upper level. Traders have to understand that markets rotate. Just because a market moves up 50 or 60 points doesn't mean it's going to go 300 points up the next day. Just because a market drops 50 or 60 points doesn't mean it's going to go down 200 or 300 points the next day. We have illiquid markets with very large ranges. I will do a little video on liquidity as well. These markets have huge ranges, right? And what that does is it messes with people's heads and they think sell-offs are bigger than they are and they're sustainable, and moves up are bigger than they are and they're sustainable. And that induces short selling at the lows and long initiation at the highs. We could use these zones to avoid this. So there's that look below 39.55, fail, back up, right? You look above 40.15, you come back down to 39.55. You look underneath 39.55, you come back up over 39.55, right? So you see how this works back and forth and back and forth. See, and the other thing too is the reason we had this move up on Friday is because we did this up, down, up motion. What that does is it flushes out a lot of the short sellers, right, who get stopped out, and it takes out a lot of the longs. So if you look at the volume, it was not that great on Friday, but the market was able to move from 4,000 to 4,053 very easily, right? We had a gap up, the gap didn't fill. That's another clue, right? We had a gap from the high of Thursday to the low of Friday. There's a spot there that didn't fill. There's shorts that are trapped there, and they pushed. And then you have what we call single prints in the Friday profile where shorts are trapped. I'll do another video on that. But this is just how we use these market profile zones. And I've done videos on how to find these levels. You know, the look above and fail, the look below and fail. It works in day time frame. It works on a 4 hour. It works on half an hour. It works on 5 minutes. And even our day traders were using 30-second charts, using the look above and fail, look below and fail as our A+ setups. And it's paying. And your risk is limited because you know if the market gets above a certain level and you're short, there's no sense being short and adding to it and blowing up your account if there's no selling, right? You need a seller to sell alongside with if you're going to be short, right? And you need supply to have run out if you're going to be long because the market's going to go up and look for it. Okay, I'm JJ. Come visit us at microefutures.com and we'll keep these videos coming. I hope they're helpful. Reach out to me if you need help, folks. Have a great weekend. Bye for now.